Since the beginning of 2025, the price of gold has surged dramatically, surpassing the $4,000 per ounce mark for the first time in history. This is a significant milestone, marking an impressive rise for this precious metal, and especially a volatility unseen in nearly 50 years. So, what's driving this increase? Let's take a closer look at the factors that have made gold the most sought-after safe haven asset today. Gold has long been regarded as a safe haven asset during times of instability, but this year, the demand for gold has surged significantly. One of the primary drivers is the ongoing political instability around the world, especially the U.S. government shutdown in September. When the government shuts down, key economic data gets delayed, creating a wave of panic that pushes investors to turn to gold to protect their assets from financial instability. The U.S. dollar, another traditional safe haven asset, has also faced challenges this year. The dollar has lost about 10% of its value compared to other currencies, creating an opportunity for gold to shine as an attractive alternative. Alongside this, the Federal Reserve's ongoing interest rate cuts have weakened the dollar, prompting many investors to seek protection in gold, a tangible asset unaffected by inflation or exchange rates. Another key factor pushing gold prices up is the fact that countries and central banks are increasingly turning to gold as part of their national reserve strategies. Many nations are reducing their dependence on the US dollar and increasing their gold reserves to protect their economies from global fluctuations. This is a signal that gold is not just a personal asset but also a strategic asset for nations. With this strong growth, financial experts are revising their forecasts for gold in the coming year. Goldman Sachs has predicted that gold could reach $4,900 per ounce by the end of 2026. It's not just Goldman Sachs, major banks and financial institutions like Barclays have also seen a massive influx of money into gold exchange-traded funds (ETFs), indicating a strong optimism for gold in the current climate. What's notable is that it's not only individual investors, but also large investment funds and financial institutions that are pouring money into gold. Gold ETFs bought over 100 tons of gold in just September, a significant figure. Gold is now becoming an important asset diversification tool in investment portfolios. It's no longer just a short-term safe haven asset, but is increasingly being seen as a vital long-term strategy. The surge in gold prices has also had a powerful impact on the gold mining industry. Mining companies have seen their stock prices soar, particularly those listed on the New York Stock Exchange, where the gold mining index has more than doubled this year. This is a golden opportunity for mining companies as they can capitalize on high gold prices to expand production and increase profits. Although gold is currently experiencing a strong rise, will this trend continue? Experts believe that gold will remain a highly favored asset in the future, especially as factors like political instability, global economic policies, and monetary policies continue to impact financial markets. However, the gold market remains volatile. Therefore, investors must be cautious and always monitor changes in the economic landscape to make informed investment decisions.